Hi, my name is Max. I'm an accounting student at Cégep Garneau. Today I will do a little financial analysis of Cabela. I end by saying if I think it's a good investment or not. So let's analyze their annual data of their income statement. As you can see, the company revenue has increasing by 30% and the income has increasing by 30% in 3 years. It is a beautiful growth. This is a good news. But there is an aspect that I want to put your attention on. There was a decrease in income in 2014, even if the revenue is increasing. So, if you look at the graph, you can see that in 2013 there were a much bigger income compared to 2014, even if the revenue was about the same. I think it's because the company made some investment cut in important areas such as research and development, R&D, and advertising. So they were increasing their profit because they reduced their expense, but that is negative in the long terms. This will explain why in 2014 Cabela had a very low growth of their revenue if we compare it with other years. Fortunately, the company has invested more in 2014, so the revenue growth for the next year should be good. It will probably help to increase the company values. Now, let's see the company's value. If we look at the rank of the other wholesaler market capitalization, we can see that Cabela is third. It's very good. Sport Direct does not show their net income, so we cannot say if Cabela are third or the second most profitable company. It does not matter. We will compare the profit margin of Cabela with that one of Dexporting because Dexporting is the main competitor of Cabela. Cabela has less income than Dexporting, but which has higher profit margin? Cabela has a higher profit margin. It's a really good ratio. Investors like this ratio because it measures how much out of every dollar of sales a company keeps in earnings. So bigger the ratio is, more effective the company is, and more it is able to minimize expenses and maximize its incomes. And that is exactly what investors like. But be careful with this ratio. As mentioned before, a company can minimize their expense when it cut in important area, and this is not good. Fortunately, like I said before, I think Cabela will invest in those important areas which cost a lot but which brings a better revenue growth. Oh, I forgot a very important element, the working capital, which is the current ratio. This is very important because if a company is not able to pay its debt, it will have a doubtful future. Current ratio have rule of thumb. A ratio of 1 and less, it's not good. A ratio between 1 and 2, it's okay. And ratio of 2 and more, it's positive. It's a good ratio. 2.8, it means that Cabela can take advantage of opportunity quickly. Cabela have the ability to meet its short-term obligations, so it's a very good news again. So, if we resume all things we have seen, is it a good investment? So for all of those reasons, I think it's a good investment. Thank you, and don't forget to watch my other videos.